Hello and welcome to The Note. Amid all the excitement over political deadlock in Washington, it's easy to forget about another very important country where political deadlock has recently been very dramatically broken. Abenomics in Japan is now almost a year old and it presents many opportunities. With me now to discuss them is the head of Japanese equities for BNY Mellon, Miyuki Kashima. Miyuki, thank you very much for joining us in London. Let's start by taking a look at how the TOPIX has done since Mr. Abe was elected. Note still this remarkably close correlation with the exchange rates, and also that we're still below the peak that was reached in the spring. Is there likely to be any breaking of this link between the exchange rate and the stock market?
I certainly believe so. Japan is at a very interesting inflection point in long-term history. After 20 years of stagnation, there are very interesting combination of Abe having a very big support from the nation, having 2/3 majority in the lower house and a 50% majority in the upper house. Probably an envious position for most politicians around the world. And by Japanese standards, in the last 20 years, we've only had a few politicians who have lasted more than 1 year. So we are probably now out of that deadlock.
Now, does that mean that we're not going to see the markets driven so much by external flows, as has evidently been the case with this correlation with foreign exchange?
I believe so, because so far the image of Japan has been basically exporters. So the correlation between not only the yen-dollar rate, but the yen-won rate has been extremely tight. But going forward, if Japan itself is going to recover, then I believe the correlation between just the currency and the stock market will probably start to decouple going forward.
Okay, now let's take a look at the internal dynamics a little more. This is what happens when deflation stays around for a generation or so. This is the amount of money that companies have saved in cash as a share of GDP. Is this being driven by deflation? How is Abe actually going to be able to reverse this?
Yes, I think the initial state when the corporate savings as a percent of GDP went from negative to positive, it was because the banks couldn't really afford to lend because of their problems after the bubble. But beyond that, the banks were all right. But in a phase of deflation where everything is cheaper a year from now rather than to buy now, companies really pulled in their wings and stopped borrowing money and started building up cash piles. And once deflation ends, I think there's a real possibility that this will reverse and companies will start to reflate again, leverage again.
If we take a look at the situation for the banking sector, very dramatic, very clear trend there. Plainly, banks can afford to lend. Your argument is that Abenomics needs to show that it can begin to jolt inflation upwards before that will happen. Is that right?
Yes. I think if you look at where the loan-to-deposit ratio was many years ago, almost 20 years ago, Japan was a normal country where banks lent out everything of all the deposits that they have taken in. Now, at 60%, they can't afford to lend if companies will want the money. Now, again, going back to what will it cost a year from now, if deflation ends and companies feel that it's cheaper to borrow now and it's cheaper to try to expand their business now rather than 3 years from now or 5 years now, this will reverse. That's going to take quite a long time. It took 20 years to get to this level. And I think sometimes in our industry, we're a little bit impatient and expect this to jump overnight. And that isn't going to happen. But that's why Japan now looks very interesting on a very long-term basis.
Now, quickly and finally, let's take a look at the bottom line for banks. The blue line there is earnings per share. How much further can profits be taken if we have reached a tipping point? And will that pull the stock market with it if they can grow profits?
I think most countries other than Japan, I think the market tends to follow the earnings. And I think this year we're going to be going back very close to where we were in 2007, and we'll probably have profits increasing beyond that. But as you can see, the gap between the blue line and the red line is still quite significant. So even with Abenomics, the market has only started to catch up to where it should be, really, in terms of earnings capability.
Thank you, Miyuki. I think the bottom line is very clear. It's difficult to think about Japan given how much America is dominating all our attention at the moment, but plainly the opportunity, the latent potential that is there if Abenomics really does work as it appears to be starting to work is very great indeed.